if I don't get audited, it's not illegal, which is an untrue statement. Just want to make
It's
sure that
absolutely untrue.
just want to
You
make
just
sure
didn't
that
get caught.
yeah, that's right.
This is the PMP Industry Insider Podcast.
Hello and welcome out to another episode of the PMP Industry Insider Podcast, where we take a look at what is changing in the pest and lawn industries, and we take you to the front lines of those who are driving those changes. I'm Donnie Shelton, owner of Triangle Pest Control and Triangle Lawn Care, my two favorite companies, might I add. And with me, as always, is Mr. Dan Gordon. Dan, would you like to say good afternoon? Introduce yourself, our sponsors, shameless plug, obviously for the peer groups and probably for your company, and our topic.
Sure, in that order.
There you go.
Dan Gordon, PCO bookkeepers and M&A specialists. We specialize in CFO or bookkeeping work and exit planning services. Our sponsors, if you're interested in marketing, that would be Coalmarch by WorkWave. If you're interested in marketing services specifically designed for pest and lawn care companies, coalmarch.com. For industry-specific insurance, the PestSure, providing insurance products tailor-made for the pest and lawn industries. PestSure understands the risk of the business and offers coverage that fits your needs. Learn more at pestsure.com. And then finally, if you're interested in pest management industry leader in designing and implementing unparalleled waste solutions for the PCOs of any size coast to coast, that would be Voice for Pest, and you can learn more at voiceforpest.com/podcast. And if you're interested in a peer group, which is a lot of fun. Actually, Donnie and I will be at a peer group next week with he is not just what is it? He's not just a client. No, he's not.
No, I'm not only the owner, I'm also a client. Isn't that how it
Right.
goes?
Yes, that's
Yeah.
the guy who had
The
shavers
Rogaine
or
guy.
something. Yeah. Oh,
No, the
Rogaine.
Rogaine.
Yeah.
Yeah. Was
Yes.
it Rogaine?
Clearly, I don't know about
I
that,
am
but
not only a
he's gonna look it
owner.
up.
Yeah, I got to look it up. Keep going. Keep
Anyway,
going.
pmpindustryinsider.com/peer groups.
Yeah.
And today, if you didn't think that you could sleep, what I'd like you to do is listen to this before you go to bed, because we're going to be talking about taxes.
By the way, Cy Sperling, the founder of the Hair Club for Men. I am not only the Hair Club president, but I'm also a client. There you go.
Right,
There you
right.
go. All right.
Clearly, I missed that investment.
Uh-huh.
So,
Uh-huh.
anyway, okay. So, uh, intro and bio. Understanding taxes is a valuable life skill that contributes to financial literacy, empowers you to make informed decisions, and ultimately saves you money. You don't need to be an expert, but you should have a basic understanding of taxes. I talk to a lot of smart people who don't. And if you think about it, well, think about it, right? So your highest federal tax rate is 37.5%. If I told you that I could help you with your labor cost, which is, or technician labor, which is 25%, you'd say, great, right?
Yep.
Well,
Yep.
taxes could be as much as 1.5 times that amount, and
Right.
yet people don't understand them. So, what I wanted to do is, because we're in February here, and we'll be well, our firm is in high gear with tax preparation services right now, but you should understand your individual taxes. And the reason I say you might say, well, my business is a corporation or a LLC, partnership or whatever.
It all passes through.
It all passes through with the exception of C Corps, but even the
Yep.
dividends pass through. So let's start with the individual taxes. And so how do you know how much to pay? Well, there is in the US we have, and each state that has taxes, it's a graduated tax table, meaning that you, at the lower ends of income, you pay less as a percentage, right? So, for example, if you're a single taxpayer or even, meaning not married, if you earn Or if your taxable income is between 0 and 11,600, you're going to pay 10%. And if it's between 11,601 and 47,150, you're going to pay 12%. And there are brackets all the way up to 37.5%, which is over $609,000 as a single payer. Okay. And so you need to understand that the more money you make, the more money you're going to pay, or the higher percentage. So we call that the incremental or the marginal tax rate. When you put it all together and you say, okay, I made 609,351, and I added all of those up, that would be your effective tax rate when you take that as a, so in other words, it's a blended rate between that 10% and 37%. Does that make sense?
Mm-hmm. Mm-hmm. Yep,
Okay.
it
Tell me
does.
where you're losing. Tell me where you're losing me.
Well, I mean, listen,
So,
I think the main thing is like when we start here, the reason that it's important that you understand these is because ultimately you're going to have to make decisions that are going to affect where you land at the end of the year. So keep going, keep going.
yep, yep. And by the way, if you understand these, then you have a shot at being able to reduce them or
Mm-hmm.
defer them, as the case may be. So I'm going to go down the major items on a tax return, the line items, and it's important to understand. So let's just go for your income. The first line item is going to be your wages. That would be your W-2, right? You ever
Mm-hmm.
look at your W-2 and it says, well, here's how much you got paid. Here's the amount of withholding. Here's how much is subject to your FICA or your Social Security and or your Medicare, right? And so that tells the government, by the way, when as an employer, they report that to the government. If you don't put it on your tax return or you make an error or you forget one of your W-2s, assuming you have multiple, the government will send you a letter right away said, hey, you forgot this.
Mm-hmm.
It's funny how you put things on your tax return that they don't know about and they don't send you a letter and say, geez, you owe you a refund. But that's a whole different story. Uh, but anyway, so you're going to put your wages on there, which also contains the amount of withholding that you had. And then the next line item would be interest. So if you received interest from the bank or an investment of sorts, maybe you're holding a mortgage and for a property you sold. So the interest you're going to put that on there,
So
and then
interest
you
earned, not interest paid.
interest
This
earned.
is
Yes, for an
income.
income.
Income. I
Yes,
just want to be
yes,
clear.
yes.
Yep.
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 And then you have something called dividends, and most dividends like that you get from an investment advisor or whatnot are known as qualified dividends. And those qualified dividends you'll put on there, but those are subject to a different tax schedule known as capital gains. And we'll talk about capital gains in a little while. Remember that 10 to 37%, that's known as ordinary income. Capital gains, or basically it's a tax on if you sell an asset and you get a reduction, you get a reduced amount. The maximum capital gain rate is 20% federally. And and by the way, if you were following the political race and whatnot, that was a hot topic. They wanted to raise the capital gain rate. And so we could talk about the philosophy behind that. Geez, it'll raise a bunch of money for the government. Yeah, but it might also tell people who are investors or people who are business people that, we don't think that you deserve that much. And so, maybe I, as an investor or a business person, might not invest in that. So there's a policy issue on that.
Yeah.
Okay.
Yep.
The next one is retirement income. And I can't tell you, we have a lot of clients who own pest control companies who might have been state workers or whatever. And then, they were able to retire early and then start their pest control company or start it in conjunction with so that they work side by side. But you're going to get a what they call a 1099-R. And depending, certain state jobs are not taxable federally and certain federal jobs are not taxable statewide. But that you have to look to see what what your 1099-R says. You'll also get a if you're on Social Security, if you're old enough that that's a
That's a concern.
it's a
I don't. By the way, I'm
concern.
not betting on that for me, but keep going. I don't think it's going to be around.
A lot of people don't, but they've been saying that for generations. I believe that there will be blood on the streets if they take it away. So they're not going to
I
take it
I
away.
don't know. I mean,
How do you take it away?
I don't know. At the time of this recording, there's a lot going away. There's a lot happening right now. In fact, it's all in the news. At the
No,
time of this
listen, you're
recording,
you're right. There's a lot of people who are getting
up in
asked to
arms and
resign. There's
yeah,
resorts that are being planned in the Mediterranean or where is
yeah.
near the Dead Sea, that kind of thing. You know, there's a lot
Yeah.
there's a lot going on, and it's good fun to
Who
watch.
knows, right? I mean,
Anyway,
listen, it's good fodder. But getting back to the tax part of it, it's like,
yeah,
ultimately, okay, so we got our income, and
yeah.
we need to make sure that we account for all of our income. So we got wages, interest, we've got retirement. What else we got?
So just that Social Security,
Yeah.
that also gets taxed differently depending on, how much other money that you make. Um, that comes off of there's certain exclusions.
Right.
And then there's the capital gains and capital losses. That comes from buying and selling stocks, buying and selling real estate, buying and selling things. You buy low, sell high, hopefully.
Hmm.
Is that the way you invest?
Well, I don't listen. I just buy every time I get paid, I buy. I'm one of these investors that I just what do they call it? Cost dollar average or dollar
Dollar
cost.
cost averaging.
That's what I do. And listen, that is for everything else. I mean, I invest in my favorite companies, which is Triangle Pest Control and Triangle Lawn. That's where the vast majority of my wealth goes is back into
And I
those
know a lot of
businesses.
people who buy high and sell low, and that causes a
Listen,
loss.
I will tell you, I learned a very good lesson when I was in college. I mean, you remember the .com bomb, right? There used to be, and I think this stock is still
Yeah.
out there. There's another one out there called QQQ, and this guy
The
was telling me, how,
cues. Yeah.
yeah, he's telling me how awesome it was, and man, I bought, and it deflated 90%.
However, if you
It,
would have kept the cues till
yeah,
now, you'd
yeah,
have made a lot of
I'd
money.
have
But
been fine, but no.
but
So I
people
that's a
get all
case where I
scared.
bought high and I got out low, and it was money I
Yeah.
didn't even have, so it was a good lesson. So
Yep, yep, yep. So that is always, by the way, you know how that works. Whenever you bet on the right football team, you'll brag about it. Whenever you buy a good stock, you'll brag about it. But nobody brags about the losers.
yeah, yep,
So
yep.
anyway, so that's capital gains, and that goes off of a different schedule. And that is graduated as well, right? So there's a
Hmm.
bracket for zero, there's a bracket for 15%, and then there's a bracket for 20% as well. And then the next one are just other additional income, odds and ends, which, believe it or not, tax refunds. And you say, how can they tax me on the tax? Well, if you deducted the tax and got benefit for it, then you're going to have to repay it if you get a refund on it.
Right.
But the last item would be business income, and that's on something called Schedule 1, which has a whole bunch of other schedules plugged into it. And that's where your business, your Schedule C, your unincorporated business, or your K1s from your partnership or S corporation, that's where they go. Okay. And it all kind of feeds into this tax return. So you get Schedule Cs, which is unincorporated businesses. You've got rents and royalties. Maybe you own some rental properties that would go there. Royalties. So Donnie, from those two books that he wrote, and he sold all that, all that money would go
Oh
there.
yeah, yeah.
How
I'm
many
telling you
books you
right now.
selling? Yeah. How,
Yeah.
how, how
Oh
you
yeah,
doing?
man. I'm
How you
telling you
doing?
right now. It's
Yeah,
my
yeah.
my primary source of income is those books. You can believe
Yeah,
that.
yeah. No, that's good. By the way, this is the best-selling author, Donnie Shelton.
Yes. Yes.
And
Exactly. Uh huh.
so when you add all that up, you get to total income, right? Now, once you have total income, then you have adjustments to the income, right? You can take some adjustments, and that would be, here's one that I just wanted to include. It's actually the first deduction, but I always laugh at it. It's called the educator expense. So let's say you or your spouse is a teacher,
Uh
and
huh.
you lay out money to put nice things on the bulletin board for the kids, and your school district won't reimburse you. You can deduct up to
Come on, Dan. We
$300.
can't pay taxes on that. I mean,
Yeah,
this
yeah,
is,
yeah.
yeah, for sure.
Well,
Yeah.
I mean, I don't know, maybe your district should reimburse you for it, but that's a different story.
Uh-huh.
And the $300 deduction, right? That's not a credit, that's a deduction. So if you're in a 37% bracket, all you're getting is what is it? 90, 100, $101 of benefit for paying 300, right? Okay.
Mhm.
By the way, I did that on the cuff, right off the cuff. So if anybody wants to check my math and I'm wrong, oh well.
Yeah.
So, okay.
Hmm.
Then you get something called HSAs. That's a plan where you can contribute your money from your W-2, or if you're, a self-employed person, but you deduct that and it goes into an account, and then you can use it to pay things like the deductibles on your health insurance or child care, things like that.
Right.
Okay. You can also deduct half of your taxes, self-employment taxes, those unincorporated business taxes off of Schedule C and or partnership income. You're going to pay self-employment tax. And basically what self-employment tax is, and I'll discuss it when we get to the tax portion, but that self-employment tax is kind of the FICA and Medicare that you would pay if you were an employee, right? So, on your paycheck, you get 7.65% taken out for those items, but your employer matches that, right? Well, if you're
Right.
self-employed on your tax return, you actually get that whole thing charged to you, and then you can deduct half of that.
Take it
Okay.
back. Okay.
Yeah. You can also deduct self-employed health insurance. So if you're self-employed or 2% more owner of a S corp, you can deduct. If it shouldn't be on your W-2, so you can't take it twice, but you can deduct that off of your tax return. And then there are pensions that you can, self-employed plan. The SEP the SEP is a really good one if your pest control is your second job, because you can contribute up to 25% of your income. That's significant. That's
That is
much
very.
larger than any other 401k or whatnot. So a SEP is always good. Um, and then you can contribute to IRAs, which even if you have a pension plan, you can contribute up to 7%. What that does is it reduces your taxable income, right? Those are all things that I said reduces your taxable income.
Hmm.
And then it gets to the adjusted gross income, AGI. And then from that, isn't this interesting? You
It's
following?
very. I'm with you, and
All
I'm
right,
staying. I'm
all right.
hanging in.
We're going to put all of this up on the show notes, and it actually goes through it in a logical order. So if you want, you can go over this with your accountant if he or she is not you know up to snuff. But you get this thing called a standard deduction, or you can deduct what they call Schedule A or itemized deduction, whichever gives you more benefit. So the standard deduction was raised significantly in 2017 with the tax reform back then. But from that, they took certain items from you, right? So there is, there's a medical deduction, but it's got to exceed 7.5% of your adjusted gross income. There are state and local taxes. And if you get nothing more from this podcast, remember state and local taxes, SALT, that's what they're all arguing about in
Hmm.
Washington. That is limited to $10,000. Go ahead. You sound
Well,
like you're,
we don't talk about politics, but we kind of do, which is I gotta believe that the tax environment is going to. I mean, it's been good, but a lot of that stuff was set to expire. I'm assuming. I don't know the skinny on this. You would know better than I do. I'm assuming that stuff's going to get extended, like some of these
I
perks
would
that
be
we've been.
shocked if it didn't.
Right. Yeah. That's.
However, this SALT thing, so let's call a spade a spade. When Trump created the tax reformed the tax system in 2017. This was one of the givebacks. It was a big one, and I would expect that they'll be looking to get rid of that. That's where, if you talk to your accountant, there's something called a pass-through entity tax or a PTE tax. That
Mm-hmm.
was all the states giving a big FU to the federal government, mainly that you can deduct your state taxes at the entity level, so you're not subject to the SALT. It only works for
Right.
self-employed people. Okay.
Right. Right.
So um, then you can deduct interest paid for mortgage interest. Here's one that a lot of people don't know. That is maxed out for a married couple at $750,000 worth of value or worth of principal. If you have $1 million mortgage, your whole mortgage interest expense is not deductible.
Okay.
So if you live in a house like Donnie, well, he probably doesn't have a mortgage, so
Oh,
it
give me a
doesn't
break.
matter.
It's more like Florida man, but we'll keep going to that one.
Right, right. So then, so interest and investment interest, if you borrow money to buy stocks or, other types of investment, you can deduct that. And then you have charitable contributions that can be deducted if they are qualified charitable contributions. So in other words, your church or your school or your, other tax exempt organization, like I can't just write a check to Donnie and say that he's a charity case and
Got to
take
be you got to be legit. I am a charity
Got to be
case,
legit.
but
Yeah, well,
you
that's
got to
what I
be
was saying,
legit.
right?
Yeah.
Yep. So,
Yeah.
so we got that, and so whichever is higher, the standard deduction, which is for married folks, is 21,900, or your itemized deduction, whichever is higher. That's a deduction. And then here's one that a lot of, our listeners are totally dialed in or should be because, they own businesses, right? There's something
Mm-hmm.
called the 199A or qualified business income.
Mm-hmm.
This is a 20% of the income from your business gets excluded. And you say, geez, that sounds great. Why'd they do that? Well, they did that when they dropped the corporate rate. But if you were an S corp or a pass through, it wasn't fair. So this is how they kind of reconcile that. So that's called the QBI deduction or the 199A. Ask your accountant about that or give us a call, whatever. And once you get that subtracted, you're now at taxable income. And then you go to those tax rates
Yep.
that we talked about before and apply it to your taxable income. And then you can take some credits. There's child credits. There's other types of credits that you can take,
And remind me, is a credit one for one? Like if I
yes.
spend $5, I get $5 off my tax,
Yeah.
or if I get $5 off my income?
So there's something called a deduction and something called a credit. A deduction is a reduction of your income that depending on what bracket you're in, that's the amount that you're going to save. A
Mm-hmm.
credit is a dollar for dollar deduction against your
Tax.
income, or yeah, against your income tax, right? So,
Gotcha. Gotcha.
so that's that. And then you've got your payments. So once you figure out what your tax is, did you make estimated payments? Did you get withholding on your W-2? Was there withholding maybe on one of your 1099s? That could be. Um,
Mm-hmm.
here's one that a lot of people don't think of, that PTE tax that you pay to the state, right? That's
Mm-hmm.
also a deduction on the state return. That's counted as a payment. Okay.
Okay.
Now, that said, after you get all that, you do the math and you either get a refund or an amount due. And
Mm-hmm.
that is tax return 1040 101. And I don't want to make this a very long podcast because I probably lost everybody halfway through and it's a snooze fest, but I think it's important for people to understand taxes
Right.
um, because it's one of the largest deductions or one of the largest expenses on your P&L. You don't realize it. And so you need to, figure out, okay, well, there's two ways to reduce it, right? You can reduce your income or you can get credits. Those are the two ways to reduce your taxes.
So
Um,
let's talk about these credits. How
yeah.
do I can I how do I get like what are some strategies for getting credit? Like is there I mean like obviously you talked about the child care one. Are there
Yep.
others? Is there something as a business
Yeah,
owner? I
there's some
mean,
energy credits. There's credits for having electric vehicles that might go away. That'll be an interesting one between
yeah, I mean
our
as of
president
today,
and his head
yeah, as of today that kind of like
cost.
I think it
Yeah,
just got executive ordered out. Not that
yeah,
deduction, but the I think the mandate
the
for it. So,
credit. Yeah,
yeah.
so it's kind of interesting. We'll see what I don't think that we'll see where that goes. But yeah, there are credits for that. There are R&D credits that come through as a pass through from your uh, your business. You can we've had some of them are kind of hokey and if you get audited, they really will challenge it. But
Mhm.
we had one of our landscape companies come to us and say this outfit decided that they went out to landscape or irrigation companies and said, "Hey, we can reduce your taxes by this R&D credit." And what's the R&D credit? It's by putting in irrigation systems and studying the effect of water on the lawn.
And did people do it? Did they like sign up for
Yeah,
this? They did.
yeah, they did.
Did they get
And
audited?
not that I know of yet. And I was told, and by the way, I'm a CPA, so I do not endorse this, but I was told if I don't get audited, it's not illegal, which is an untrue statement. Just want to make make make
It's
sure that that's
absolutely untrue.
just want to
You
make
just
sure
didn't
that
get caught.
yeah, that's right.
Oh no, I don't think I'd be able to sleep at night if I pulled something like that off because I would just be so concerned that I would get audited. And it's like, oh, by the way, not only do you owe this tax now, you also owe us this much in interest and penalties, and you've got till this date. And who? I mean, I don't
Yes.
know. It's like it's almost like the benefit's not worth it. It's just not worth the risk. But
Right.
you're going to study the effect of water
Yep. That's
on
why
the
I wouldn't be able to sleep at night. I would think I'd cause a flood. But
That's just crazy. So okay, so there's credits, and then of course there's. I mean, we all know. I say we all know, and it's not a game, but ways to reduce income. I mean, there's strategies that we do at Triangle. We will, and I mean, I don't know that they're really. It's just moving puzzle pieces around.
it's
Like we'll,
deferrals. So the
yeah,
idea
we'll
is you're going to
prepay
defer.
bills, right? We'll do things like that.
Yeah.
But I mean, the very next year we have the same problem, right? It's
Yeah.
not like we're gonna get that far down the road.
The
So go
idea
ahead.
is to defer revenue and to accelerate expenses. So let's say you have this $100,000 bird job,
Mm-hmm.
and we have the ability to push it out to January from December.
Mm-hmm.
Well, you're still going to have to take it next year, but you're saving the time value of the money, right? So
Right.
if I have to pay it April 15th of next year or 15 months, what if I were to invest the money at, 5% or whatever, how
Hell, you
much
don't even have
money
to
would I
invest it with the rate of inflation. You'd still be coming out better, right? So
have? Well,
you can do nothing, right? And you can be like, still,
that's
if it was,
that's been corrected, I heard.
yeah,
So,
maybe. I don't know. And
yeah.
by the way, I'm not on either side of the aisle, so I don't want people to think I'm an anti or a for or pro or anything like that. I'm just simply making the point that if you look at economics and the value of a dollar on January 3rd, I'm sorry, on December 31 is just called a net effective of a dollar. And then you fast forward until December 31st of the following year, whenever it is that you pay the taxes, which would probably be the April 15th of the following year, that dollar now may be worth, say, 90 cents of the buying power that it had back before. So that's all. So
Yes, 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 yeah.
I will know.
So that would be Taxes 101. And if you're interested in finding out more, we have articles on our website, pcobookkeepers.com. If you're interested in contacting one of our client managers because you have questions, we're happy to do that as well. But that in general,
That's it.
that's a wrap.
That's a wrap. Okay, so now you understand the 1040. If you've got questions, obviously call Dan. Do not call me. This is one area where I'm like, I don't know, man. Like it's like I can look through the basic elements and say this is what it does, but that's about the extent of it. So, with that, thank you all for staying with us for yet another episode of the PMP Industry Insider Podcast. Just remember, all resources and topics that we talked about today are going to be available on the podcast website, pmpindustryinsider.com. Just take a look under show notes, and I'm sure Dan will have some sort of, I don't know, he'll have some sort of notes about a 1040 if you're interested. And as always, we very much appreciate any positive ratings and reviews that you have for the show. Just go over to however it is that you consume the show, give us some nice positive feedback. And if it's not, or if you're upset and you're super, super angry, we just have you call Dan. And with that, we'll sign it off. We'll see you all next time. Take care.
See ya.
Bye-bye now.